Hello friends, let's start with another portfolio review. So investor is a corporate employee and he is just 22 years old and he wants to invest in stock market for 15 to 20 years. And he says that he is currently confused that in which FMEG stock he should go for better return over the period of 12 to 15 years, whether it should be Havells or Polycab. So in my view, I think Polycab will be the better choice, and the reason is because of the market share. The company is the leader in the wires and cable sector, and the market capital of the company is still small compared to Havells. So Polycab can have a much longer growth run, and now it has started moving into the FMEG sector also. So I think the growth potential in Polycab is more than Havells. And he mentions that he want to add demand because of its attractive price right now, which is a good company, so I think you should go for it. And he's asking which company should he remove from the portfolio and how much CAGR return can it generate. So for this, my friend, again I will just give my opinion on the companies. So now let's start the portfolio review. So portfolio size is currently 1 lakh rupees, current value is 97,000, currently there is a loss of 4,000 rupees and the number of holdings are 15. Looking at the size of the portfolio, which is in its initial stage, and I'm sure the size of the portfolio is going to increase in the future, but looking at the current size of the portfolio, my opinion will be again the same, that you should have minimum 3 to 6 companies only in the portfolio. Because if you will have companies in the range of 3 to 6, you will at least have close to 20,000 rupees invested in one company. And on those 20,000, if you get some return, then at least those return will be substantial return. Alright, so let's start. First company is Asian Paint. Invested amount is 15,000 rupees. Quantity is 5. Currently there is a loss of 9%. This is a good company. If you want, you can continue with this company. Next company is Astral. Quantity is 6. Invested amount is 11,000 rupees. Currently there is a profit of 1%. This also is a good company, a market leader in the piping sector. You can continue. Next company is Bajaj Finance. Quantity is 2. Invested amount is 12,000 rupees. Currently there is a loss of 3%. This again is a good company, a leader in the NBFC sector, which is also growing its profit at a very healthy rate. So this company can give you very good return in the future also. So with this also you can continue. Next company is Berger Paint. Quantity is 9. Invested amount is 5,000 rupees. Currently there is a loss of 2%. So fundamentally this company is also good. Since the portfolio size is less, if you want, you can go with either Asian Paint or Berger Paint. Next company is CDSL. Quantity is 6. Invested amount is 6,500 and currently there is a loss of 4%. This also is a okay company, but this is a cyclical company, you can say, because this company will do good whenever there is a bull market, because that is when you'll see a lot of retail investors coming to the stock market. So what I'm trying to say here is that this will not give you consistent return, but if your horizon is long, then it can give you decent return also. Because if you look at the longer horizon, the number of people which are going to come in stock market, number of demat account which is going to get open in stock market, only and only going to increase in India, because the penetration is still very low in India. But if you were to ask me whether I will include this company in the top 6, my answer will be no. Next company is Deepak Nitrate. Quantity is 4. Invested amount is 7,000 rupees. Currently there is a loss of 2%. This also is a good company. This is a leader in the sodium nitrate business. Right now all the chemical companies in the chemical sector are down, but fundamentally and business wise nothing is wrong. This also is a good company. Next company is Devyani. Quantity is 19. Invested amount is 3,000. Currently there is a loss of 12%. This is a okay company from the food sector. If I have to give 6 companies in this portfolio, then maybe this company will not get included in that top 6. Next company is Divi's Lab. Quantity is 2. Invested amount is 6,800. Currently there is a loss of 2%. So here you might be seeing that the LTP for Divi's Lab is 3,300, and the reason why you are seeing this is because this portfolio came to me a couple of weeks back, and that's why you are seeing a difference in the current price. But nevertheless, we are here to discuss the companies, their fundamental, their business. So let's go with it. Next company is EMIL. Quantity is 21. Investor amount is 1,700 and currently there is a loss of 3%. This company also I would not fit into my top 6, and you can see here why I mentioned that you should have 6 companies in a portfolio size of this, because you have invested 1,700 into this company. Even if this gets 10x from here, your amount will be only 17,000 rupees. So instead of investing in multiple companies with less capital, invest in top 6 companies that you have maximum conviction on, whose business are excellent, who has good growth potential. Invest in those companies, but at least invest some good portion so that whenever those companies increase, you will see a good healthy return in your portfolio. Next company is Fine Organics. Quantity is 1. Investor amount is 5,600. Currently there is a loss of 6%. This also is a good company. This is a leader in the oleo based additives, and the demand for the product that this company is manufacturing is only going to increase in the future. So this is a good company for long term. You can continue with this. Next company is Jubilant Food. Quantity is 7. Invested amount is 3,900. Currently there is a loss of 11%. This also is a good company from the food sector. This is also currently under pressure because of the inflation issues that we recently had, but in the long term I think this company can give decent return. Next he has is the ETF, which is MAM 150. Quantity is 34, invested amount is 400 rupees, and currently there is a loss of 1%. So again the same comment for this also. Instead of investing 400 rupees into this, you can simply avoid this and invest in some other company. Next company is Relaxo. Quantity is 10, invested amount is 9400. Quantity, currently there is a loss of 12%. This also is a good company. This is a leader in the footwear sector. If your horizon is long term, then I think this company can also give you decent return. Next company is Tata Consumer from the FMCG sector. Quantity is 2, invested amount is 1500. Currently there is a loss of 2%. This also is a good company from the FMCG sector. But I also see that you have VBL. So what I would have done is I would have gone with one company, and out of these two I would have gone with VBL because VBL is growing at a much faster rate. Hence you will get much better return in VBL compared to Tata Consumers. So now coming to VBL, quantity invested is 8, invested amount is 9000, and currently there is a profit of 3%. For VBL, I have already told that profit is growing at a very good rate, and their business is also super strong, and it has very good growth potential in India. The product that they have recently launched, which is Sting, it is doing very good, and that product has provided a very good boost to this company's revenue and profit. And for India, you know that India has the youngest population in the world, and the youngest population is obviously going to consume these kind of products, although it may not be good for their health. But we are humans, and you know that there are a lot of things which are not good for our health, but we still do it. This is human nature. This is not going to change overnight, and these company will continue to do well. So this brings us to the end of the portfolio review. I have tried to make it very quick. From my side, I wish you all the best for your investing journey, and stay invested because staying in the market is the most important thing if you want to create wealth. Right now everyone's portfolio is down by around 10 to 15%, even 20%. Do not worry about it. It's just a temporary thing. Just keep on investing. Whenever you get money, keep on buying good companies at good discount. Keep on accumulating, because this phase is also going to go away, and then once it goes away, then we will regret that we should have invested in this period. So all the best again. We'll meet in the next video with some more information. Thank you.